Okay, so the next thing that I'm going to take a look at is depreciation with a reducing balance, all right? So if we look at a 2023 paper and it was question 1B, you can see here that our office equipment is given and it has a cost of 65,000 and then we have a net book value of 32. No other adjustment to your equipment as you go through it, but your depreciation here, it's to be depreciated by 10% per annum on a reducing balance basis. Okay, now that could have said equipment is to be depreciated 10% of net book value, same thing, all right? So just to transfer in the wording of that working, that's what I want you to have as you go through it, okay? So when you look at it then, when we're back in the Excel file, all right? We're looking here and this is the wording we're after, okay? So equipment is to be depreciated by 10% per annum on a reducing balance basis. Now remember what I said, that could be 10% of net book value, okay? Same thing. So our equipment then, how are we going to go about doing this? So we need to have our net book value for the equipment. So taking your equipment figure, go back to the question itself, all right? And this is really important here because we're used to taking the cost figure on all of these. So this time it's actually the 32,000 that you're interested in, all right? So take your 32,000 and it has to be 10% of that. So you'd have your 32,000 by 0.1, okay? So 3,200. Now that's your charge for the year. So that's your admin expense and that's fine. You won't have any issue with that part, okay? What you need to keep an eye on though is when you get your accumulated depreciation here. So the accumulated depreciation, it wasn't 32 starting off, okay? So you just need to go back to the question itself. So look at what we had here. So our office equipment, the cost was 65, the net book value was 32. So figure out how much you had written off that, okay? So you have your 65,000 minus your 32. So we had 33,000 written off already, and now we're going to add on another 3,200. And that's really important that we make sure we have that figure correct. So you're 33 and you're 32 there. So that's your accumulated depreciation figure. Now, because we didn't have any adjustment in terms of we didn't buy equipment or we didn't sell equipment, there's absolutely no need to go with a T account this time, okay? You're fine to go with it as you have there, all right? Now, just remember when you go to transfer in your equipment, the full value of it, okay? So this is depreciation on equipment. The equipment itself though, just remember the original cost, because that's a common one as well, that you can actually get all that hard work done and then not put in the cost figure. So the cost figure there is 65,000, okay? And that's your tangible fixed asset, that's your cost figure. So just watching out for that if to give you a reducing balance method, okay? Just to make sure that your process is correct on that as you go through it. But I think most of you should be absolutely fine on that.